A striking revelation has emerged. 42% of Generation Z prefers using debit cards over credit. This statistic not only highlights their unique financial habits, but also raises questions about their understanding of safety in the digital economy. According to the PYMNTS Intelligence report titled, Gen Z Financial Habits Put Debit Wallets and Influencers in Charge, this generation, which has grown up entirely immersed in the digital landscape, exhibits a remarkable level of confidence in their purchasing decisions. However, the real story lies not just in what they buy, but in how they approach their financial transactions. For Gen Z, the perceived security of digital wallets, debit cards, and recommendations from social media influencers plays a crucial role in their financial behavior. This reliance on digital payment methods indicates a shift in consumer habits as they navigate their financial lives with a set of assumptions that may not always align with the realities of financial security. The report reveals that Gen Z is redefining traditional consumer behavior. They tend to save a larger portion of their income compared to older generations, yet they often keep their savings in digital wallets or even cryptocurrencies. When it comes to making purchases, they predominantly choose debit cards, but they are also quick to adopt innovative payment solutions like Apple Pay and Buy Now, Pay Later (BNPL) services. Amazon stands out as their go-to marketplace, while mobile devices serve as their primary shopping tools. Additionally, social media influencers wield significant influence over their purchasing decisions, with 81% of Gen Z members frequently making purchases based on influencer recommendations, nearly 3 times the rate of baby boomers. This reliance on social cues as trust signals is noteworthy, especially considering that influencers do not guarantee transaction security. However, beneath these surface-level insights lies a more complex narrative. Gen Z's trust in digital payment methods may obscure the potential risks associated with them. For instance, while 42% of their grocery transactions are conducted using debit cards, twice the rate of credit card usage, debit transactions are often more vulnerable to fraud. Many Gen Z individuals perceive debit as money they own, yet these transactions typically offer less protection against fraud compared to credit cards. Moreover, 13% of Gen Z's savings are held in digital wallets, and 6.3% in cryptocurrencies. They tend to trust these digital platforms more than traditional banking institutions, despite the fact that fraud protection and loss recovery can vary significantly among different providers. The implications for financial institutions, including issuers, acquirers, and FinTech companies, are profound. The adoption of financial products is no longer solely about convenience or rewards. It increasingly hinges on trust signals. Some of these signals are rooted in the resilience of the systems themselves, while others stem from the perceptions shaped by peers and influencers. This disconnect between perception and reality presents both opportunities and challenges for financial providers. Additional findings from the report paint a fuller picture of Gen Z's financial habits. This generation saves more than any other, setting aside 36% of their income over the past 6 months, compared to just 27% for older generations. They also utilize BNPL services at a higher rate, 18% compared to 12% among older consumers, while holding fewer credit cards overall, 55% versus 71%. Interestingly, their average monthly balances are lower, at $1,667, compared to $1,959 for other age groups. This discrepancy may influence how lenders approach underwriting and the design of rewards programs in the future. For financial service providers, the takeaway is clear. While Gen Z may be using familiar financial tools, their trust is established in a different manner. Bridging the gap between their perceptions of safety and the actual security of financial systems will be crucial. Ensuring that these systems are as secure as Gen Z believes they are could be just as vital as delivering the right products at the right time. What do you think about Gen Z's approach to finances? Do you agree with their preference for debit over credit, or do you see potential risks that they might be overlooking? Share your thoughts in the comments.